Hi, I'm Aaron Rubin, and I'm a wealth advisor at Werba Rubin Papier Wealth. One of the most common questions I hear from clients and prospective clients lately is about ESG investing. They see it in headlines, in their 401k options, in the fund names, and in conversations at work. And the question usually isn't, should I do ESG, but what does this mean and does it belong in my plan? In this video, I want to explain what ESG is, how it's used in investing, and what it is not, and why it keeps coming up so often, especially here in the Bay Area. ESG stands for Environment, Social, and Governance. It's not an asset class. It's not a separate category of investing. It's a framework some investors use alongside traditional financial analysis. Environmental factors look at how a company interacts with the natural world. This includes things like energy use, emissions, water management, and exposure to climate risk. Social factors focus on how a company treats people. That means employees, customers, suppliers, and the communities it operates in. Governance looks at how the company is run. This includes board structure, executive compensation, shareholder rights, and transparency. That's it. ESG is a way of asking additional questions, not a promise of outcomes. In practice, ESG tends to show up in a few specific ways. One is risk awareness. Certain environmental, social, or governance issues may highlight risks that aren't always obvious in the short term. Another is values alignment. Some clients want their portfolios to reflect their personal priorities, for example, avoiding certain industries or emphasizing others. And a third is portfolio construction. This is where funds or managers explicitly incorporate ESG factors into their research and investment process. What's important to understand is that ESG is a methodology, not a guarantee. It may affect portfolio exposures and outcomes, and results can differ depending on approach, manager, and market conditions. ESG is not a philanthropy. It's not the same thing as impact investing, although they're related, and it's definitely not a promise of better performance. ESG also isn't the same as green or sustainable marketing language. Fund labels can sound similar while doing different things under the hood. Why clients hear about ESG so often? Large institutions and regulators have increased ESG-related disclosure expectations. Asset managers now offer a range of ESG-labeled strategies and ESG-screened approaches, and many professionals want to understand how investments align with long-term risks. Here in the Bay Area, there's also a strong culture around innovation and sustainability and thinking about the future in longer time horizons. So clients aren't asking because ESG is a fad. They're asking because it keeps appearing in real financial decisions. In public markets, ESG usually means screening, tilting, or engagement with large established companies. A lot of innovation tied to sustainability or social outcomes actually happens in private markets through startups or corporate initiatives. When you see headlines about major companies and investing in sustainability accelerators, that's a signal about how capital markets are evolving, not an investment recommendation. For investors, those stories provide context, not a recommendation. It's important not to blur that line. It's also worth saying this clearly. Not every client uses ESG, and that can be a thoughtful choice. Some clients don't have strong values-based preferences. Others don't want to narrow their investment unnecessarily. ESG definitions can also vary widely. Different managers may score the same company very differently, which can create confusion if expectations aren't aligned. And for some clients, ESG simply doesn't change the decisions that matter most. Things like tax efficiency, liquidity planning, or managing concentrated stock. Choosing not to use ESG isn't necessarily a concern. In many cases, it's a deliberate decision. And that's why I approach ESG conversations with simple questions. What are you trying to accomplish? What matters most to you? What concerns you? What constraints exist? From there, we can clarify whether ESG is about values alignment, risk awareness, or something else entirely. If ESG makes sense, we talk through it and how it's implemented, what trade-offs exist, and how it fits into the broader plan. And if it doesn't meaningfully support the client's goals, we're comfortable saying that too. The key is that ESG doesn't need to be mysterious or polarizing. It's just one tool among many in thoughtful financial planning. The key is understanding what it does, what it doesn't do, and whether it adds value in your situation. If you have questions about ESG investing, or if you're trying to figure out how it fits or doesn't fit into your overall plan, I'm always happy to have that conversation. Thanks for watching.